USDA sees record corn and soybean crops, but not as big as some feared. Will that make any difference to prices? Weather remains an issue for growers around the world. Is it changing the outlook? Big yields and transportation problems spell trouble for cash markets. Could storage pay off this year? I'll discuss these stories and more on this week's edition of The Buzz. The market braced for bearish news from USDA's August crop report on Tuesday. The news wasn't exactly bullish, but it wasn't 100% bearish either. USDA estimated the corn crop at just over 14 billion bushels on yields of 167.4 bushels per acre nationwide. Both those numbers were lower than trade guesses, but crop ratings on our own survey point to better numbers ahead, especially if forecast rains fall as expected. The government's first survey of fields found a record number of ears per acre, and if those ears add some weight, look out. The agency also had some friendly news for demand, boosting its forecast of both ethanol and exports, cutting 65 million bushels off its tally of 2013 inventories. Slightly better demand also kept its new crop carryout from rising much, but at 1.8 billion bushels is still a very burdensome number. Corn got the biggest boost from the report, though prices didn't exactly explode. December corn posted a key reversal higher from fresh contract lows, but couldn't really hold those gains. It remains hemmed in a gap above the market at 378 in a two-week downtrending channel. If USDA's carryout estimate holds, the market is fairly priced now, but that's a really big if. For soybeans, USDA put the crop at 3.816 billion bushels, a little less than we anticipated, with yields about a half a bushel per acre less than our survey at 45.5. USDA bumped up its forecast of 2013 exports, but kept its estimate of ending stocks unchanged at 140 million bushels. USDA cut imports a little, but bumped up its estimate of so-called residual usage to 94 million bushels. This essentially means the government believes the 2013 crop yielded 2 bushels per acre better than previous estimates. That bombshell, if true, could fall September 30th when grain stocks are updated. August futures had a wild week before going off the board Thursday, one indication of just how tight old crop supplies are. That situation should change dramatically with new crop production. USDA raised its forecast of 2014 carryout to 430 million bushels. USDA may be too low on demand, especially from China and from resurgent soy meal sales. But supplies look big, and they could get bigger if South American growers follow through with plans to boost production when they begin seeding this fall. November futures plunged to new contract lows after the report. Crop ratings suggest the crop could get bigger, which could force futures below $10. Wheat was a sideshow mostly in Tuesday's report. USDA increased its forecast production to 2.03 billion bushels thanks to better winter wheat and spring wheat results. Carryout only increased 3 million bushels to 663 million on hopes for a little improvement in exports and feed usage. Demand could improve a little more if weather problems develop overseas. While conditions in the U.S. remains favorable, there's potential trouble in several key growing areas. Rain in Western Europe in July and August was good for the corn crop, but likely damaged the quality of wheat there, which could open up a little business for the U.S. into Algeria, Iraq, and maybe even Egypt. It's also been blisteringly hot in cornfields from South Russia into the Volga region, with temperatures expected to hit 100 degrees this week. Ukraine had cooler temperatures and a little more precipitation, but could still see its production suffer. A lot of talk also emerged this week about drought in China as well. It's been dry, though fields have received a few timely showers. Cool temperatures are forecast for next week, with better chances for showers in the north. China has huge reserves, and farmers increased acreage there again this year, which could keep imports from the U.S. blocked. Here in the U.S., growing season weather is still a concern, especially for soybeans. Rains mostly missed about half the northwest corn belt so far in August. Precipitation into the end of the month should continue to favor the eastern U.S. Storms over the next week could be important to maintain record yield potential. The other factor to watch is acreage. USDA's Farm Service Agency is scheduled to release its first report of certified acres on Friday, which should provide some clues about how much land farmers were prevented from planting. These numbers are always difficult to interpret because they don't match the figures from either crop insurance data or USDA's production estimates. But traders still have plenty of questions about how much ground might have been switched from corn to soybeans or not planted at all due to cold, wet conditions. The other emerging issue is weak basis in the cash market, especially for new crop. Corn bids are already 53 under for harvest in Sioux City, Iowa, where beans are 65 under November. Record cost to ship grain by rail and high barge freight rates, along with big crops, could result in grain piles in many locations. Cash storage remains the most profitable post-harvest strategy in our studies. Bases should strengthen nicely into spring for corn, mitigating at least some of the risk of falling futures prices. Beans have more downside risk, however, in futures right now. Well, that's all for this week. We'll discuss the FSA acreage report and other issues next week on our next edition of The Buzz.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of cash or we'll have to sell you out.